Welcome to Market Watch Daily. I'm TMI, here to break down the latest market moves surrounding Nvidia and why fears around China may be sinking the stock right now. Smash that like button and subscribe for more videos breaking down the stories that move markets. Let's get into it. Nvidia shares have taken a hit, down over 6% in recent sessions. The reason? Reports that Chinese regulators are quietly discouraging major tech firms from buying Nvidia's H20 chip. This is a custom chip Nvidia built specifically to comply with US export restrictions, essentially designed to keep the company in the Chinese market while staying within the law. Now that workaround might be unraveling. China's reported move to limit the H20 could slash demand from some of Nvidia's biggest customers in the region. And that's a big deal, considering how important China has been to Nvidia's long-term growth story. Let's break this down from multiple angles. First, why is China doing this? There's no official statement yet, but the speculation is that this is a retaliatory move in response to ongoing US restrictions on high-performance semiconductors. China wants to nurture its own chip industry and reduce dependence on US tech, and discouraging local firms from using Nvidia chips fits right into that narrative. Second, what is the H20 chip exactly? It's a scaled-down version of Nvidia's powerhouse AI chips like the H100 with less computing power and tailored to meet the letter of US law. But it still gives Chinese firms access to Nvidia's CUDA software stack and training infrastructure, huge advantages for AI developers. So now, with the H20 in limbo, Nvidia could be boxed out of a huge customer base. That's why the market is reacting. Third, how does this affect Nvidia's future earnings? Analysts are now revisiting their models. While the US and Europe remain strong growth regions, China was expected to contribute a steady stream of revenue, even under restrictions. If those sales dry up, it could dent Nvidia's 2025 and 2026 projections. Fourth, is this a long-term threat? Possibly, but not necessarily a death blow. Nvidia still has dominance in other key markets. Its chips power everything from OpenAI's data centers to autonomous vehicle platforms. Plus, Nvidia is racing to expand chip production and software services outside China. It's also worth noting that Chinese firms still want cutting-edge AI tools. If not from Nvidia, they'll either seek out domestic alternatives or eventually return to the negotiating table once political pressure eases. So what should investors do? This dip might be an overreaction, or it could be the start of a longer revaluation of Nvidia's China exposure. If you're long-term bullish on AI infrastructure, this could be a buying opportunity. But in the short term, the headline risk remains high. Bottom line, geopolitics just slammed into tech again. Nvidia's story isn't over, but the China chapter just got a whole lot messier. This is TMI. Thanks for watching Market Watch Daily. We'll be watching this one closely. See you next time.